The BlackRock ETF, is it the end of Bitcoin? I'm not entirely sure. Chris, what do you think?
Well, depends on how you define end.
So I guess let me walk back and be clear. My biggest fear is that BlackRock is going to be using this ETF to, I know you can't completely centralize Bitcoin, right? So I don't want to assume, and I don't want to tell people that, oh, BlackRock's going to use a centralized Bitcoin. But there's this idea that, one, they could scoop up a lot of Bitcoin, and then they could just issue paper Bitcoin, the ETF, to essentially please the masses while still maintaining control. So I guess maybe let me back up. What exactly is the BlackRock ETF? Because I've heard a lot of people even argue that it's not exactly an ETF. I've seen some of those Twitter debates where they're like, oh, it's not a. So can you actually maybe treat me like I'm a 5-year-old? What is the BlackRock ETF as an actual ETF?
Well, there's a lot to unpack. So let's do it from the classical mechanical sense. An ETF is an exchange traded fund. What that means is it is a share that has a create redeem process involved in maintaining some sort of rebalancing metric depending on the supply and demand of the shares. For example, if there's a lot of sells, we're going to redeem shares so that the price differential does not have a massive imbalance against the spot price. If there's a heavy buy side flow, we're going to create shares to then offset the magnitude of the price increase that would then create some sort of spread against spot.
So all that matters in short is that you're not actually, when you buy the ETF, that is not a claim on actual Bitcoin.
Absolutely not.
Correct.
It's not a claim. Every single ETF is not every single, 98% of them, because there are some ETFs that are constructed just as a pure basket of a sector of stocks or a capitalization weighting of stocks. There's a handful of them that are actually constructed quite well. They liquidate the stocks per pursuit or buy per pursuit per the flows of the shares. Typically, they do it twice a day, usually at 2:30 in that close.
But for this ETF, for example, if you buy this ETF, you're not actually buying the actual Bitcoin. However, BlackRock would be buying a pool of Bitcoin
to hold Coinbase,
to tie it to the ETF.
Well, they actually have a pool that is cold storage that is not to be touched. And then for the create redeem process, they've got a traded portion also held at Coinbase.
So that means the more demand for this BlackRock ETF from anybody, whether that's institutions or just regular investors, the more Bitcoin a BlackRock will have to buy to meet that demand
on the ETF's behalf.
Yeah,
which grows their Bitcoin holdings.
Right.
Correct.
How corrupt can you be with that, hypothetically? Like, even within the bounds, like I know BlackRock will always do something legal and fishy, but are there things that we outright know they could do? For example, like, can they rehypothecate? Can they loan out the Bitcoin that ETF is tied to?
You know, I would almost put most of that onus on Coinbase, right?
Okay.
As far as the hot wallet's concerned for the trading account, and then the cold storage. Cold storage, you'd have to do a lot to somehow rehypothecate that without it being noticeable or trackable, traceable, etc. Hot wallets are also complex, but not as complex, because the addresses have to be white labeled. There has to be some sort of swap agreement, etc., or borrow lend agreement.
But like, as an idea, they could do that.
Yeah, I mean, and you could take hidden rehypothecation, leverage on the Bitcoin holdings while they're sitting there, in not to go too far down like the FTX or other paths, but like in theory, it could be levered. The filing is pretty vanilla. It's very conservative. They've tried to address as many concerns of the SEC as possible, citing all of the past ETFs filings that have been rejected, but that's not to stop them from changing paths once they're approved or, doing something worse.
Let's focus more on the phrase you mentioned, create paper. The more manipulated and more egregious and more capitally destructive paper traded vehicles already exist. You have the BitO, which is CME futures long, and then you have the levered, and then you have the inverse. So that is literal paper Bitcoin that is cash settled.
That's
and
currently traded.
That's currently traded, that has no limitations to the amount of uses that can occur on those instruments.
Terrible for the end investor, right? It's got multiple levels of fees and cost
Mhm.
structure built in, but maybe not completely awful for Bitcoin. The only real impact it has on Bitcoin is some price impact, right? There's no governance impact. There's no ability to shift mining incentives or deal with Lightning Network or anything with the core Bitcoin protocol.
Right. So in that regard, it's a negative convex vehicle for price, meaning just the existence of those three, forget the fact that they're long or short, act as a negative towards price, right? Because if you look at the long, the structure is only front month, 90% has to be in front month. That roll not only has a cost, which decays the principal equity into the account, but has a problem with liquidating at a certain time that then forces the roll into another price. And that creates that negative pressure at all times, plus cost.
So if paper Bitcoin already, what I would gather, if paper Bitcoin kind of already exists and we already have this manipulated market, why is BlackRock going for the spot ETF?
Because smart investors know it's manipulated and they don't trade those vehicles. And
but is the spot ETF going to be better than what's currently out there as far as manipulation and speculation?
More digestible,
infinitely better,
way easier for the massive amounts of advisory assets to allocate a portion to a BlackRock Bitcoin ETF in the same way it's, passive investing has grown exponentially over the last 15 years. It's a lot easier to say, oh, I'm going to put 1% in the SPY than it is to go out and try to structurally do that yourself.
Yeah, buy all 500 stocks cap weighted. Yeah.
So
and you already have corollaries and analogs, right? The commodity ETNs at like a USO, for example, for oil, or GLD for gold, right? They are imperfect tracking mechanisms to spot.
Yeah.
Because of this.
They're just trading vehicles,
right.
Basically, like speculating on the price of the asset. There's no real underlying ownership.
So at the most basic level, is this good for Bitcoin?
It's good for Bitcoin price.
So I'm glad you said that, because I always try to differentiate between people who are just price go up and like, oh, I actually want a decentralized global currencies.
It's probably less desirable adoption in terms of Satoshi's idea of adoption, right? Like the idea would be to distribute it to as many people as possible, get the world using it to transact with each other, store your value. Not really for BlackRock to be the ringleader of that, but if that occurs and money goes into it, that is adoption.
What it risks is an unwarranted, unnecessary correlation to traded anything, right? But what it gains is the fact that people may actually study it further, and it may be iteration one for, call it mom and pops and institutions getting at least invested in it. And then as they try and make their allocations more robust, more tactical, etc., they probably will choose ultimately the self-sovereignty of saying, okay, I have 1%, 2% in this Bitcoin ETF that's part of my asset allocation. Now I'm going to actually go buy 5% of Bitcoin, and then I'm going to allocate another 5% to 2 hedge funds that are going to trade another 40 or 50 coins in addition to Bitcoin that are going to give me returns outside of that.
So in short,
he risks the FUD that's out there about it too, right? Like,
so you can view this. So you guys would view this, I guess I would say like this. It's not necessarily good for the mission short term. You'll have people, basic people who are too scared to self-custody and just buy Bitcoin now say, oh, okay, I'll buy the ETF. But then hopefully once they're in the ETF, they realize, why am I just buying the fake ETF? Why don't I actually buy the real thing?
Like it's similar to what's happening where you had this, after 08, you had this big passive move, right? And they sold it to the public as low cost, right? But what is passive? Passive is the absence of strategy. So you had this.
You're talking about in pertaining to what markets?
Passive, all markets, passive investing.
Okay.
Indexing.
Got it.
And
whatever.
you can't ever beat an index. Well, like a hedge fund, for example, is not designed to beat an index, because what do you do in a hedge fund? You fucking hedge, which means you're going to remove some of the risk of an index, right? So you naturally want to underperform, but you outperform on a risk adjusted basis, which is all that really matters. But the point is that in the passive traditional world, you already have had critiques and a move back into stock picking, value investing, and actively managed mutual funds, actively managed hedge funds, because people are realizing that, wait a minute, I'm concentrated into 7 to 10 equities and all these passive products because they're poorly constructed. I need more diversification, and I need an actual human to underwrite risk, et cetera, et cetera.
Well, it's also been the largest benefactor of Fed expansion, and now we have Fed contraction.
But
and
not really, because
but I
they're
mean,
printing while
but,
raising rates, which
you know, and then
makes
low
sense.
inflation, and now we have inflation and devaluation of our currency fast and furious. So, you know, there's Bitcoin's other role, mission, if you will.
So you've been managing actively digital assets since 2017, 2018.
Yeah, early 2018.
So
Personally,
is
2017.
the
professionally,
Bitcoin spot ETF like a watershed moment? Like, is that going to change anything you guys do? I guess not, because you're just going to continue to just only do the real asset Bitcoin. You wouldn't touch the ETF, but like, does that open avenues to where maybe, let's
certainly
say,
changes the entire market dynamic, right? Like a spot Bitcoin ETF that needs to create and redeem shares on the schedule of 9:30 in the morning and 4 p.m. in the afternoon and doesn't trade weekends. I mean, that takes a 24/7 market structure and sort of overfits it to the US market structure.
Yeah, and you'll end up having a lot of gaps, similar to how the commodity ETFs trade.
Yeah, I mean,
so does
crypto
this
for a
help or
while.
hurt you guys, or indifferent?
It helps us from a couple vectors, because it, like Matt said, the placating of the FUD and the SEC is going to shut down, the Fed's going to shut down, we all know that it can't be shut down, but it kind of assuages that from an investor and fund flow perspective. It gives us an ability to perhaps trade some liquid options on top of that ETF, might hedge our spot portfolio in an effective manner. And then it generally gives us, by being, you know, structurally long in our fund, even though we trade long, short, market neutral, an enormous capital appreciation boost, because with over 75% of the Bitcoin off exchange, if these large ETFs, which they don't make these to try and have less than 10 billion of assets, we've all seen some mathematics on it. You know, it pushes it to 220, 160, 360. But the reality of it is that it would have an unbelievable rise in price just to get the first tranches to work.
Yeah, and then I don't know if you've seen, but in the last 2 or 3 days, ETH ETFs are now, the filings are starting to flow. So, you know, you might see something like what occurred in, I don't know, 2019, where you start getting, Bitwise was one of the first movers, Grayscale one of the first movers, and you start to go down the gambit of product for, you know, for retail. You start with Bitcoin, go to ETH, and then as there's some clarity around some of these other coins, more product starts to get created there.
These larger institutions, are they going to go, oh, okay, Bitcoin's okay, there's an ETF, let me buy the actual stuff? Or are they just going to say, oh, Bitcoin's okay, I'm just going to buy the ETF?
Most of the time, large institutions do not do anything passive. So
they might go to BlackRock and say, build us our custom,
right,
you know,
Got
like,
it.
or
Coinbase, you know, I mean, really, I think Coinbase is going to be a large winner here. Like every one of the ETFs cites them for market surveillance. Most of them cite them in their trust company for custody, which is interesting. I mean, it's like a double-edged sword with what's going on with the SEC. The SEC suing them, but then
not touching Bitcoin, right?
Yeah, but you're suing the platform, right? So but then you're going to allow the platform to be the qualified custodian
Yeah.
for all these ETFs, like,
And requiring the reference rate.
right,
Yeah,
so.
it's pot, see kettle, right?
Now, briefly, there's multiple institutions. I think
Yeah,
Fidelity
five-
being one of them, who are also
Yeah,
issuing.
Valkyrie,
Does that matter, or is it all about the BlackRock?
I mean,
a couple of them had like 12-week head starts. ARK has been working on this before BlackRock.
yeah, same.
So,
Fidelity's filed like 3
well, and
times.
then obviously
Grayscale,
Grayscale's
too.
been negotiating
2 years. Yeah,
the whole time, and they just filed something recently. So
they filed for the SEC to approve all at once.
BlackRock has the
That would be
ability.
hilarious.
BlackRock has the ability to poof, here's the most money into our product, right? Like they're in every inroad you could possibly be. They're on all the wealth management platforms. There's, I don't know what they have, like 12 trillion in assets themselves, and then they're probably connected to 50 trillion in assets in terms of what their market scope is.
Perhaps more.
So briefly, why now, do you think?
Well,
I mean, the floodgates are open. The timing was very weird.
are you asking why now for BlackRock?
Sure, of course, once BlackRock and all the other large institutions,
It's
right?
why now for BlackRock because their client demand is making it such. Like Larry Fink is obviously conscious of the fact that just a little while ago he's saying the exact opposite about it, right? And then so there's films, and I'm sure people have seen, clips of videos where he says it's all for fraudulent activity. Then, oh, it's international money and da 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 da.
But why would demand change in like the past 3 to 4 months?
BlackRock doesn't have any of their own money. They have client money. So their product is at the behest of their clients. So if all of their clients are demanding a regulatorily approved Bitcoin long exposure product, they're going to build it, because Wall Street, the number one thing that they're good at is financialization and the building of product. That's it.
Can you be,
why does that demand exist? Well, we just had our 5th bank failure year to date, right? Like it's not being talked about, but we had March where multiple banks failed, and that problem still lies within every one of the bank's balance sheets. And with
the narrative is that those banks failed because of crypto, right? So,
well, some narrative is that, but when you look under
they
the
failed because of treasuries, Sam.
Oh no, I know, but I'm just trying to think from like
people are out front beating their chest saying it's because of crypto, but that doesn't translate to the PacWest, which yes, the Native American, yes.
Like I'm just trying to think like from I view BlackRock as like the ultimate institution. So BlackRock would be the person.
By ultimate, please don't call them good, because they're not.
No, not the ultimate good, but like I view BlackRock, Blackstone as arms of the U.S. government. So if I have that view,
BlackRock is, Blackstone is not.
Sure. So in short, though, if I'm an arm of the U.S. government and the U.S. government is saying the dollar's fine, the Fed's fine, the banking system is fine, these bank failures are only because of crypto. And then you have that similar arm now say, oh, we're giving you the okay to get an ETF because frankly, what BlackRock has they've only failed how many filings? Like they have very good ads. Like it's a 4,000 to 1 odd that this ETF doesn't get approved.
You must
right?
have really good lobbyists.
So what's like, that's what I'm trying to understand from their perspective. Like why now? Even if it is from the demand of their clients, like there's still a whole narrative, and their clients are often that same circle. Yeah, the clients of BlackRock are also like, who owns BlackRock? Fidelity. Who owns Fidelity? BlackRock. Like it's all just a revolving door. So what does that exactly entail?
A lot, but you're rightly identifying the narrative differentials. However, the causation and the mechanics are the same. There's no way on God's green earth that you're going to get any admission of, oh, our credit rating's bad. Oh, our dollar hegemony is falling apart. Oh, our policies don't work. I mean, they're lying through their teeth about every statistical measure of everything, right? And then inflation's transitory, blah, blah, blah. These aren't omnipotent groups. These aren't all-knowing groups. And oftentimes their narcissistic agendas prevent them from even accomplishing anything. So therefore, the confirmation of the opposite of what they're gaslighting the public with is right here in front of us with, oh, 5 Vanguard, Fidelity, Valkyrie, blah, 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 BlackRock. That means, okay, we're going to do the usual play both sides. We can't have none of this. And then, oh, by the way, because our client demand is huge, we're going to make sure we make money off it.
The dollar's fine, the banking system's fine, but also we're going to buy as much Bitcoin as we can.
Right. And so if you're saying that in the public, the opposite's obviously true, even without the ETF filings. But the ETF filings are giving us a modest valve release or hedge to what we ultimately know is occurring. Because like this isn't something that's macro-prudential in the short term, it's macro-prudential in the long term. There's not been one single period where fiat goes up. Not one. It always goes down. Whether it's down 99.3%, which is what the dollar's down since 1913, or 98%, which is what it's down since 1971. There's not one up move ever. So, you know, you're just kind of adding to the quiver of ability to offset the destruction of the Leviathan, right? The global states, whilst on unbacked currency, is only going to drive it lower. And there's just not enough assets in the world to buy while that's occurring.
Got it. Makes sense to me. I think that's all I got for you guys. So I appreciate you coming on. I'll probably have you back on and dissect maybe once the BlackRock ETF is actually approved, and maybe we'll see how some of this actually unfolds.
Cool. Be happy to.
Thank you.